Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. We're going to take a quick look at Sandbox, see what's going on here, and obviously take a quick look at Bitcoin. In most cases, we usually do that. Today, we're not actually. So the reason why I'm not is just for time's sake, so I can get out a lot more analysis videos here today. I'll probably analyze Bitcoin at a separate date, but know if you are new to the channel, not a financial advisor, I just love teaching people how to trade, and this is the purpose of my channel. And ultimately, the purpose of my community too. I have a trading community with a trading academy that I'm rolling out with next month, and we all learn and grow together. It's a phenomenal experience. I send out signals for every single day trade and swing trade that I take as well. So check that out in your own time. New slots available January 1st. We are all full for the moment. Take a look here at Sandbox. So one day chart, let's go ahead and work our way down, right? We're up over the 50-day simple moving average, 200 is trailing behind. So that's pretty standard stuff, but it's nice that the 200 is, correction, the 50-day simple moving average is working its way back up. That's kind of giving us that reiteration that we have a nice support level at 505. Okay, so that support should be the bottom for Sandbox. I don't foresee us coming down there that low anytime soon, but we can tell obviously that is kind of just a good, nice support level. Okay, RSI is up over 50, under 70, which is awesome. We love to see this nice little continuation. I wouldn't be upset if the price comes back up over 70 on the one-day chart, because that's really a good continuation motivating factor there. And it just kind of shows that 70 on the RSI could be a potential resistance level, and that's likely because of 682 and 745 being a lot of volume in that area. That's a key level resistance zone. Okay, so we'll see here soon how that works. But for the moment, let's go ahead and take a quick look. In fact, let's go ahead and see what the volume looks like now, ever since the price has been retracing. Where's the most amount of volume? Right there, exactly at 510. That's awesome. So we got not only the 50-day simple moving average, but also a strong amount of volume there, kind of reiterating the fact that we have a nice, strong support, though. Okay. Furthermore, too, like I mentioned before, we have the second most amount of volume outside this bottom channel in here between 682 and 746. So that is going to be a resistance channel. That's why it's getting rejected right now. It's having trouble breaking through there because there's a lot of volume, and volume is a very strong support and resistance level. Okay. So just be mindful of that. That's a very strong resistance channel. So what'll probably happen is it'll reject the way that it's right now. It could break into that and then stay in that channel and then break above, but it'll probably spend a little bit of time in that range there. We shouldn't expect it just to blast right straight through it. Okay, that's very rare for a price to just go right straight through a volume resistance channel. Okay, so moving on to the 4-hour, let's see what's going on. We are up over both moving averages. That's fantastic. We love to see that. Kind of just giving us that affirmation we have a nice key level support. We're also kind of trending above 70 on the RSI, but just tapering down below right now. So I'd prefer for the RSI to be under 70 on the 4-hour chart personally. That just makes me feel more comfortable. When we have an RSI over 70 on the 4-hour, it's that midterm time frame that kind of tells us that, hey, this is too much movement too fast. So these two strong legs up that Sandbox did recently, and that bounced off of each key level support, is essentially a good thing, but it caused a bit of a overextension, if you will, because you had a lot of increase in a short amount of time. So if you look at this, in 12 hours, we saw a 25% increase. That's quite a lot. Furthermore, the other 12 hours, we saw almost 17%. So those two increases cause the price to come up over 70. It's not a bad thing, but it's normal for the price to correct itself because of that. So I wouldn't be surprised if Sandbox does come down and essentially bounce off of this key level support here at about 630. In fact, I'm going to go ahead and mark, let's see, I mark my alert here for what? Let's go ahead and do it, what, 640? Just be on the safe side there. So if we do get a bounce, we can go ahead and catch it. But at this point, we are testing this key level resistance at about 683, and that is definitely something we'll see happen soon if that's going to do that. But here's the thing. On the 4-hour chart, you typically want to respect the MACD, okay? And that's the moving average convergence divergence if you're new to the channel. So MACD, moving average convergence divergence, is taking a 12-day exponential moving average and moving it concurrent with a 26-day exponential moving average. So the 12 is the faster moving average, this blue line here, moving with the essential 26. Now, the thing I want to point out here is that we're potentially losing momentum here, right? This could shift into bearish type of sentiment, so we could start seeing, this kind of giving us an indication that the bears are going to take control. How far that control could last, it's hard to say. Obviously, it's contingent on how overextended something is, but we just noted that we had a 25 plus a 17% increase for Sandbox, but it has a nice consolidation phase in between. Okay, so let's take a quick look at this here. You look at the TD sequential, we went up to a 6, reset down to a 4, back up to an 8, and now we're down to a 2. So hypothetically, if we do not get a decent amount of correction here, closer to 630, we could see a very strong divergence, whereas the bears might take control. Now, ultimately, it's not a big deal as long as this next low is higher than the previous high, right? So ultimately, that's why this key level support level is important, 630. If we get the price to bounce off 630, we'll be in really good shape. If we lose 630 as a support, we need to reevaluate and understand that it might potentially continue downwards. So again, not a bad thing, not a good thing. You'll hear me say that a lot. Not bad, not good. Honestly, more neutral is important because this is just standard stuff happening right now. Okay. So the fact that it's up, up to an 8 and kind of retracing back down at a 2, we could experience about 24 hours worth of bearish divergence to the downside. And if it happens, that's actually very healthy. We want to see that occur because if it does do that, then we can get a bounce off of 630, 640 and push back up to the upside. We don't get a correction and the price continues into this resistance channel created by the significant amount of volume, we're going to have a possible rejection that could last a lot longer than just an immediate short-term consolidation phase, right? So key takeaway here is to pay attention to the next low. How low is the next low going to go? That's what we want to pay attention to. So looking at the 1 hour chart, we can see we got a bunch of consolidation / resets. So TD sequential is null and void there. And unfortunately, the lagging span is basically telling us to close our price or position, right? Now, I told us that previously as well, so you got to understand that Ichimoku Cloud is not perfect. It helps you with the very conservative trading styles, and it helps you with getting in when the momentum is moving the direction you're heading, and getting out before that momentum is officially lost. Right now, we have a firm indication that the momentum has been lost, and that we shouldn't consider adding to our position based on this conservative trading style. Okay, because again, the bottom line is that the price action is doing very well, comes up, bounce off of support. We should expect it to bounce off support again. That's what it's telling us right now. Again, this is all contingent on Bitcoin not dropping its bottom. Yes, Sandbox has done very well, contrary to Bitcoin's lack of success recently. But the key takeaway is that Bitcoin had nice higher highs, nice higher lows, a couple of 6% increased days in the last 72 hours. So there's that little momentum that kind of causing coins like this to bounce back. But just know, big picture, Sandbox has a lot of potential, and it's definitely best in class for lack of better terms. But we just need to know that we got a key level resistance here that will probably hold the price action down. So the longer we can consolidate at support at 630, the better. Okay, so I would be happy to see the price come down to 630 so we can add to our position and effectively take another leg up to break through that key level resistance. Okay, so I hope that works out well. We'll go ahead and take another look at Sandbox tomorrow. Let me know your thoughts. Comment below if you have any considerations, extra feedback, the whole 9 yards there. And if you consider becoming a member, feel free to message me through Telegram at CryptoCache Tech, and I'll be happy to answer any questions. For right now, again, the doors are closed until January 1st, and we'll have that Trading Academy rolled out late January. Looking forward to helping you out and hearing from you. Have a good rest of your day. Thanks again for your time. We'll see you.